Its basic earnings per share remains at 62, which is a 40.9% gain over what we had last year. Now, Nestle, which is the foods giant in the country, posted 65.92 billion naira, a 1.9% decrease from what we had last year, which was 67.20 billion naira for the same period under review. And we've got the profit after tax at 8.88 billion naira. That is 24.9% decline when you compare with the same period last year, which yielded 11.83 billion naira. Of course, the profit before tax was also negative, which is 10.60 billion naira, and 23.9% decline. Now, if we take a look at what the earnings per share is, we do not have that for now. Then we know we didn't get the details of this company in terms of what led to this decline in the record of that company. And if we turn over to Dangote Cement was able to come up with positive indicators all through the record. We have 242.21 billion naira released or made available to the Nigerian Stock Exchange. That's a 15.9% gain over what we had last year, which was 208.90 billion naira. Its profit before tax was 128.72 billion naira, a 20.2% gains over what we had in 2014 for the same period. For the same period last year, it was 107.07 billion naira. What we know is that Dangote Cement, which is a subsidiary of the Dangote group of companies, is divesting into oil and gas. The more is intensifying its investment in the oil and gas sector by building a refinery in Lekki, Lagos State, Nigeria, and a lot of things seem to be happening. During the week, the United States was able to make some amount available in support of that project. And we also know that the United States is going to be supporting the company, the Dangote group of companies, with some amount of training, amount of money, which has been gotten already. There's an MOU that has been signed. So all of this is expected to be impacting on the shares of that company. We've got three of the subsidiaries of Dangote Group listed in the Nigerian Stock Exchange, talking about Dangote Sugar, Dangote Flour Mills, as well as Dangote Cement, all subsidiaries of Dangote group of companies. And it is expected that all this will be impacting on the markets. Now, during the week, we had the Capital Markets Committee meeting of the Nigerian capital market. Of course, that took place in Lagos at the CMC, at the Securities and Exchange Commission office. Now, we had the launch of a new e-dividend platform at that event, which is a two-day event. Now, the DG, this Director General of the Commission, that's Mr. Munir Guazo, was able to launch that before a pressman, and he gave the reasons why it was launched, and would like to have that interview shortly. Now, one thing that we were meant to have a guest, an investor in the studio today to discuss this issue with us. How will this impact on the market? But unfortunately, we've not been able to have our guest in the studio regarding this. But a lot of things that analysts have said is that this is expected to change the market positively, because we are supposed to have, currently we have 80 billion naira as unclaimed dividends. By the time this e-dividends platform kicks off fully by the end of August, it should be able to reduce the level of unclaimed dividends in the country, because the e-dividend platform allows for the payment of dividends and bonuses into a savings account. And this is a trend that never existed in the Nigerian capital markets before. For over 30 years, we didn't have that. So with the introduction of this right now, it is expected that unclaimed dividends issues in the country will reduce. But then we'll go on a short break, and when we come back, we'll play back that comments that the Securities and Exchange Commission DG, Mr. Munir Guazo, gave at that event. Welcome back to Capital Markets. The program is still coming to you live from Channels Television. And you can join us on Twitter via our handles at Channels TV and at Tempeli. And right now we are being joined from the United Kingdom, Manchester, specifically by Ikpe Musa Uhumavi. Ikpe Musa is actually a senior counsel at Braze Law Partners in Manchester, UK. Thank you for joining us on the program.
Thank you very much, Temple.
All right. Well, you were supposed to review the earnings with us, but then we had some technical glitch. That's what I understood from the crew members and the MCR, our master control room. Now that you're back, what are your thoughts on these earnings as they were released during the week?
Well, I think the earnings are not so much of a surprise to analysts, given the political situations that we've had in the last 6 months. You know, prior to the first report of earnings, we had this issue of politics, you know, taking a center stage in the scheme of things. As the political system grinded on, we had issues of spending, then this investor inertia regarding the possibility of the outcome of the election turning negative, and maybe spurring an incidence of violence in the country. But we're happy that didn't happen, and things are beginning to take shape. But the idea of investors pulling out slightly and taking that wait-and-see approach has sort of fed into the current situation we find in the market at the moment.
But one of the other reasons that was given for the lull in the markets again, and for these underperformance of some of these companies, is because yes, the election came in with a new party in power, and unfortunately, the party has not been able to appoint ministers. Do you think that by the end of Q3, which we're in right now, we will be able to see more companies posting impressive earnings? Because the president had said that by September this year, he will be appointing, or what we have right now in the news is that by September this year, we will be having ministers announced under in this administration.
Well, you're right, Temple. But if you look at the earnings as we see them, you will see that the reasons for the slight, not so impressive earnings that we've witnessed recently, it's not a domestic issue only. We have the changes in the global environment playing a key role as well. If you look at companies like Seplat, for instance, Seplat has had an impressive history from 2011, where you had year-on-year increase in growth from 2011 to 2013.
Right.
The drop in the earnings of Seplat as of 2014 is not unconnected with the changes in the oil and gas business, where you had more players coming in, and the oil gluts and the struggle for supremacy and space within the system. So